Today, we will talk about how to prepare for small business taxes. Let's have a look at the details. Tax preparation needs to start immediately for small business owners. An organized bookkeeping system must be set in place in order to ensure you have accurate records and receipts for all deductions. If done properly, you will have all the information to ensure you get the best tax breaks. To get prepared, you can learn how to get organized, keep track of the right information, and avoid costly mistakes. The first step is getting organized. Consider consulting an accountant to help you get organized. A certified public accountant, CPA, can help you to set up a paper or software accounting system as soon as you start your business, to help you keep your records up to date. The CPA can also tell you about changes in the tax law and let you know if you are required to file quarterly, semi-annual, or yearly tax returns. File IRS Form SS4. If your business is just starting out, one of the first things you need to do to keep detailed tax records is to request an employer identification number, which is done by filling out Form SS4 and filing it with the IRS. File an expected taxable income form. To get your taxes processed in a timely manner, most businesses file their projected income figures from year to year, and then make adjustments in the next fiscal year, depending on how things actually ended up. Find the correct forms, given the structure of your business. Depending on the nature of your business and how it's structured, you'll need to use different forms to prepare for your taxes properly. Start a tax diary. On a weekly or monthly basis, make sure you, or your bookkeeper, add sales and receipts to a tax diary. It's important to keep track of receipt dates, amounts, payees, check numbers, and employee accounts. Collect a W-4 from each employee. You will likely need to apply for an Employment Identification Number (EIN) or tax number, and report all employees that are hired. The W-4 should be filled out by every employee upon hiring. Create a separate worksheet for each type of information. Keep a calendar of important tax dates. Set reminders on your computer and/or cell phone to ensure you don't incur costs for tardiness. The second step is keeping the right records. Keep a detailed record of all income. To calculate your expected income taxes, it's important to itemize all the money coming in over time. It's important to keep track of everything that you purchase through the business, as well as everything you purchase personally, for the business. Keep track of employee payroll and contributions. Applicable expenses could include W-2 and W-3 payroll returns, health savings account HSA, contributions, health insurance premiums, and payments to contractors. Keep track of your personal salary as a small business owner. There should be documentation as to how your salary is decided. It is usually not lawful just to pay yourself with all the profits from the company, depending upon what you end up with from year to year. And the third step is doing your taxes. Send your employees tax information a few months ahead of time. Gather your tax records at least a few months before taxes are due. Decide how you'll do your taxes. The easiest way to do all your taxes is to hire them out. Request all the proper tax forms, or talk to your CPA about what they need. Deduct all necessary expenses. The IRS defines all deductible expenses as being anything that's necessary and ordinary, meaning that you've got a huge window of opportunity for making deductions. Archive all tax records for 5 to 7 years. This is the time in which you can be audited by the federal government, so it's important to retain all of your well-kept records for at least that amount of time to give yourself a big safety net. Another good reason to use a software-based system of record keeping. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.